Good evening, everyone. It's Victoria here. It is, we're ready to start 5 minutes after the hour. So welcome, everyone. We are going to talk about resets today. A lot of that's been happening, and want to let you know, what you should look for. Okay, so let's get to it. Before we do, quick disclaimer, okay? Always have to say, I'm not a financial advisor. Trading is risky. You only want to trade with discretional funds. You don't want to trade what you need to pay your rent with or your bills, okay? So with that being said, let's get started. And as you all know, I do like to go over the cycle a little bit because this is very important in identifying the resets, okay? So real quickly, let's do this. Let's draw out, this is the W, this is the V, and then we have the M, then it goes back in the range, and this is what we expect, and then back down here. Okay, so this is your peak formation low, okay? And this is level 3, right? Remember, this is your bull cycle. So the bull is WVVM. So here's your W. Okay, we expect consolidation, level 1 consolidation. We expect the pullback. We get our first V. Okay, we expect the consolidation here. This is usually, level 2 is usually your 50 and 13 cross, okay? And here's your second V, right? And then we're off to level 3, okay? And here is your 200, 800 cross. Sometimes it could be a 50, 800 cross up here, okay? So here we go, 3. I'm just gonna say, we'll do 3, 1, 2, and then 3, and then we expect a reversal, right? That's what we expect. And we expect the cycle to continue with the bear. So let me do that in red, okay? We expect a bear cycle now. So do you guys agree, right? Do you agree that once we have this nice bull run, and remember, this can happen in 3 days, or I like to just say it could be 3 levels, but usually 3 days and 3 levels can happen, or it could take anywhere from 5 to 10 days for these 3 levels to occur, okay? It could take literally 10 days for this, right? I like to count mine, instead of counting the levels of consolidation, like these are the levels of consolidation. Some people do count their levels that way, which is perfectly okay, right? I like to count the pushes, okay? This is how I like to count them. So this push right here that goes into level 1 consolidation, right? This actually completes this cycle here, right? So then boom, we know that that cycle is done once this push comes out. And so now we have level 1, push 1, level 2, push 2, level 3, push 3. That's how I like to see them. That's how I identify them, okay? There's no wrong or right way of identifying them. You can count the levels of consolidation instead of the pushes, right? And then last but not least, the ADR is very important because each one of these pushes should be a completed ADR. Let's just pretend this particular one is 50. So this 50 pips, maybe it takes 2 days to get there, who knows? Maybe it completes all in one, right? But it has to complete in order to get to the next one, right? So we agree that this is a complete bull run cycle all the way up, okay? Now we're expecting a reversal, okay? We're expecting it to do the very same thing, right? Right now, this cycle is completely ended. So now we're into the new cycle. And remember, this was the M. Sorry if this is getting too messy, but I'm gonna try to keep it clean. That's the M. So now we're looking at the bear cycle. Okay, the bear is the N, A, W. Okay, so we expect reversal, right? M, A, and then W down here. Okay, back into the range. Okay, and again, we'll talk about the EMAs that you're going to use to identify this. This push to complete that cycle is usually the 5 and 13 cross. Okay, level 1 is the 1350 cross of the EMA, and level 2 is the 50 to 200 cross. Okay, and then we're in level 3. Remember, this could be the 200, 800, or it could be the 50, 800, and your EMAs could be all spread out. Okay, and this again, some pairs it literally lasts a day. Sometimes it lasts 2 to 3 days. You just never know, right? So now I've explained to you, what to expect for the bull and what to expect for the bear, right? This is a completed cycle, right? So now we're talking about reversals today, right? And your reversals are going to happen when your ADR doesn't complete, right? And usually this is your, maybe I should draw this down here somewhere, because we've already said that we're expecting prices to, if this is going to, we're expecting prices to continue down this cycle, right? Like I just said, right? But then all of a sudden, instead of, this is your 200, right? Bear with me. 200 is usually white. Let me do that. Let's see if I can try and draw this on here before we go to the chart. So here is your 200 and your 50 cross, and the 50 is usually a blue, right? Let's say it's crossing this way. So this happens right here, level 2, right? Your 15,200. So let's say prices, you're expecting this to go down, but instead of it going down and breaking it, because remember, if prices are printing underneath the 200 and 800, basically, excuse me, the 50 and the 200, obviously this is an area of interest. If prices break this level and they start to print here, then it's going to go down, right? But the reset happens, right? Whenever prices come down here, you're expecting, right? You're expecting this A2 to go down. But instead, guess what happens? Price does this, right? It prints the W and it goes back up and it starts to do the bull cycle again, right? So that's how you identify your resets. They usually occur around your 200 EMA. This is not a complete ADR, right? This is probably 1.5 ADR, because remember we said each one of these levels needs to be the complete ADR. And sometimes you'll notice that this reset happens right here and it hasn't completed. It might be 1 ADR because of that initial push down there, but once it doesn't complete level 2, right? It doesn't. It comes to the point to where level 2 looks like it's about to happen, and then you have this nameable pattern, which is the W. And this is where you would see price printing this W on top of this 200 EMA, and you'll be like, okay, looks like it's resetting, right? It's going to reset and continue this bull cycle. It's not going to break this and go down like we're expecting it to complete the bear cycle. All right. I hope this makes sense, guys. So what I'm going to do now, we're going to go to the chart. Okay. I'm going to go to the chart. So give me 1 second. Let's change. Hopefully you guys can see this now. We're looking at GU. Okay. Let me know in the chat that you can see that we're looking at GU. We're gonna cover EU as well. Cover that. Can you please mute yourself out? I just want you to chime in the chat, okay? Just keep yourself muted. All right. Okay. All right, let's get started. So let me make this smaller real quick. All right. So I'm going to annotate this too. So we just talked about the pattern, right? We just talked about, you know, the, oops, that one you can't see very well. Let's go to a darker color. Right? Talked about this, BVM, back into the range, right? So right here, I also want you guys to note, this is something I drew on the chart. Okay, so you're gonna see, I'm gonna be able to highlight this. I drew this on the chart because it was an area of interest for me. So I'm gonna draw it there. I'm gonna go ahead and put it there too, okay? So you're gonna notice, we're gonna go back a little bit to right here. You see this beautiful W pattern right here, okay? This basically was level 3, right, of that particular cycle. So we're just gonna start here, right? So we're expecting this to do this, right? W range, you know, level 1 consolidation, VVM, right? We're all in agreement, right? So that's exactly what we're expecting it to do. And that's what it did, right? It did just that. So this to me was a level 1 consolidation. And here we have our V1, V2, and then M, right? So once this ended, right, we agree that this ended, what we were expecting for prices to do this again. We're expecting for prices to come out of the range and give us, you know, the AAW back into the range. But guess what happened, right? We did not get that, right? We got the initial push that completed the cycle there, right? I guess I should have drew that there. And then we have our M, right? Then we have our 13 and 50 cross right here, which is level 1, okay? Okay. It's level 1 right there. So we're like, okay, perfect. This thing is going to do what we want it to do, level 1. So now what we're expecting level 2, right? Level 2 is the 50 and the 200 cross, but we didn't get that, right? Instead, prices came down here. They gave us, it looks like 1.5 ADR, right? From here to here. And instead of breaking the 200, you see we have prices touching the 200 there, and then it touched again here, and it gave us the W. So that was our reversal, right? This is our reversal. This is the, I wouldn't say, this more so the reset, right? To go back up, okay? So do you guys see that how prices did not complete, it did not complete the cycle as we intended it to, right? It did not give us this beautiful pattern here. It stopped about right there, okay? We only got level 1, right? So then prices came down here and reversed and reset to the bull, okay? So that's exactly what happened, okay? So does that make sense on the reset? So here we are now, right? We started the new, that was Monday the 30th, and then let's see, almost another week came by, right? So the cycle started itself on Thursday. Okay, so we have this W. Let me do it this way. I like to make this a little bit big. So clearly that was their reset there. So we have our level 13 and 50 cross here. Then we have consolidation. Okay, then we have another push up. This is our other next push up because we had a little pullback there. And then this is how I see it, 3 pushes that go up, right? So now we're back up here to the M, okay? Okay, so now guess what happened, right? What are we expecting, right? We're expecting prices to reverse. Give us the M, A, and then W back into the range. But guess what happened? Again, it reset again. Okay. Now, when I saw this multi-session, because obviously this is a multi-session M, right? Those are supposed to be pretty powerful setups. You're supposed to be able to take those, with your eyes closed, right? And shoot, markets can do whatever they want. Okay. They can do whatever they want. But if you were to have taken this, then you didn't lose because you would have been able to take that short. Okay. You'd have been able to take that short from this here cross, right? Okay. It's not bad if you were able to target, if you're targeting this EMA down here, this 200, right? But this is like almost holding it for the whole day almost, right? This is literally a session right here, right? And for most of us, we're not available for that. Okay, we're just totally not available for that session. So you would have come here, you would have, if you were available for this, you would have probably taken this down from here to the 50 EMA, what we always talk about, or you would have targeted this area, right? That's why I kind of highlighted this. You probably would have targeted this area because it is an area of interest, right? And that could have been your take profit right here. Okay. This is the London Open right here. You can see prices pinned the 13 basically around the 50 EMA, and they dropped again, right? So this could have been an opportunity to take this thing short if you were available for this, okay? I would have taken this thing short right to this psychological support and resistance. So for those of you who are using this on your chart, this is your Asia Open. This is the high and this is the low for the week. This prints on your chart on Sunday. So today it's going to print. I'm pretty sure it's going to be printing around here. It's going to reprint here to show me the high and low for the week. Okay, so I would have taken, my target would have been this area right here. I've been watching this, okay, because I don't know what's going to happen. I don't know what the market is going to do, but I'm just going to take it there and I'm going to wait for the next step. And guess what they did? Again, just like they did over here, right? They came over here to the 200 EMA and they did not complete this beautiful cycle that we were expecting. And they ended up reversing off of the 200, more likely the psychological support and resistance, and it went back up, right? It went back up for now the third time. So I count this as 1, 2, and now this is the third time up, okay? So the real cool thing about this, I wonder if this is showing it. The real cool thing here about this indicator that I use, it helps also to identify these different, where you are in the cycle, right? So this literally changed for me. And now you can see down here, it says 2 days ago, it was a peak formation low, which is true, right? So Friday and Thursday, those 2 days. So today is Sunday. When the market's open, this is going to change to 3. Okay, so let me know now it's the third day in peak formation low. So peak formation low, what's the deal with the peak formation low? You're literally expecting prices, or you're expecting to look for any reason to go long, right? But because this thing came up here 3 times, guys, I'm gonna wait. Like, I did short this. I shorted this on Friday. Okay, but I did not hold on to it. I just didn't, because one, I knew that I am looking to go long. and I am at the high. So this possible short might not be a long short, right? And it's still not where I still need to know, okay, once it comes here to the EMAs, then I'm going to be like, if it breaks it, then we're on to the races. We're looking for nothing but shorts, right? But being that it's now come up to the high for the third time, right? 3 different days. My thing, it might just go down. It just might continue and give us what we're looking for, right? We might just get that next week on Monday, right? So I'm looking for this to happen, right? W. But it has to cross this, guys. It has to break the 200 in order for us to get the A2 here, which is the 50, if I can draw this, and 200 cross for us to complete this cycle, right? So that's how you identify your resets. Okay, now this is on the H1 time frame, guys. All right, we always want to make sure you do your analysis from the higher time frame. You can also go to the H4 if you want to take a look at that. I just come up here real, you know, I don't spend a whole lot of time, but when I come up here, I'm looking, I'm like, okay, we're in the direction. Like if I was looking to go short on Friday, to just short it real quick. And I'm like, yeah, I can short this thing really quickly here. I wasn't going to hold it because I did not know what prices were going to do once it got to the 50, right? So that's good. We're going to go short. Come down here. I went short. I think I even have the slide. I'll show it to you where I was already in the market at this time. I took a picture of it. So with these EMAs, you know, coming down like this, right? This is also kind of a good indication for me to say, okay, perhaps this thing is going to go short and it's going to complete this cycle. But I don't know what the market is going to do, but I want you guys to be able to see these little clues, right? And to use them to help guide you on what you're going to do, right? Don't go short past this thing until it breaks it or until this 50 crosses it, right? Because that's going to be your clue that now you're going short to finish out this cycle. All right, so that's how you identify resets. Let's go down to the M15. Now on last week, let's see if I can find it here. These, for those of you who have these indicators here, this is the peak formation high-low indicator. I call it like the stars, people call it flower. This right here, when I see this on the M15, so this was Thursday, the 13th, I'm gonna go to the H1, the 13th, right? We don't see it, right? We do not see this star like we do, what was it? The green star, like here you see the red star, right? That tells us this is like a peak formation, a bona fide one. But we see, what I do see is the reversal arrow, and then I see this beast arrow here. Let me take this off so you can see it. Okay, I do see this, and I do see, you know, the reversal star showing up. So again, this was Thursday. Okay, this was also another reset, guys, right? Obviously, same thing right here. I don't see the big peak formation star on my higher time frame. I saw it on the lower time frame. So that's also kind of like a heads up that this thing was not going to be a long-term short. So let's go back to Thursday. Okay, see it right here. So this happened Tuesday, the day before. I got this peak formation on the lower time frame, the M15. So that let me know that this thing was going to go short, right? And it did, right? It gave us the short right out of the end of New York, right? If you're available for that, for you all, it's evening. For me, you know, it's afternoon, so I'm off doing something else, right? So I'm typically not available to trade this time, right? That's not really normally what I would be trading. I normally trade the New York session. Sometimes I'll trade London if I'm available for it, but it's super early in the morning for me, right? And for you all, you have to kind of decide what what you're going to do, right, in terms of when you're going to be in the market. So if you got this indication right here, this is a perfect heads up that you're going to be going short on the next day, right? And this one here showed up again, you know, this peak formation low on the M15. It did not show up on the higher time frame. So that was an indication to me that this was going up and it was going to reset. Okay, that's how I use these on the lower time frames. However, if you are available to trade this at that time, then trade it. Okay, let's go back to that day right here. You totally trade this. Okay, you see how prices came right down to the 800, right? It bounced off, gave you a beautiful W, right, on the lower time frame. Okay, and you could have totally traded this. These boxes right here, we call them the shadow boxes. They're the market open boxes, right? So if I was available to trade London, then this was a good reversal, right, for me to go short. I could have taken this short in London. I would have exited out right here, okay? 52 pips, that's not bad. And then we get a reversal right before New York starts, right? I'm still not available at this time. I'm not, right? I'm usually available at this moment right here. Okay, this is where I'm available. So if I would have saw this, I would have known that the long was the direction that I would be going, because you can see these W's in here, these multi-session W's within within this day, right? Because this is London and then here's New York and you see this other W. So I could have totally taken this looking for reasons to go long because I would have saw this here. And I'm like, okay, I need to, the long is a better trade for me on this one. And I would have taken this long, okay, if I was looking at it. But as you can see, if you were scalping this, I don't like to scalp, but some people do. You could have, again, you could have taken that short. As soon as that popped up and gave you that reversal signal, you could have taken this long, okay? Okay, and then you could have went down short and went back long. Me personally, I don't like to trade that way. That's not what I do. So I would have been looking just for reasons to go long only on this, okay? So that to me is a heads up that this thing is going to reset. And that's what I'll be looking for the next day to go long, and try not to get confused with, you know, what the market makers are doing. But your analysis, literally, you need to be looking at the higher time frames. H1, I think, it's good enough, right? You can go again, like I shared with you on H4 to see, okay, am I going in the right direction today? Right? Because you always want to go with the trend, right? I mean, oftentimes you can counter, like I did counter this, but I like to go with the trend, and I don't hold these counters that long. I just don't. Okay, I don't care if it's level 2, level 3, or what, but I always try to trade with the trend when it comes to these pairs. So let's look at EU. We had some questions on that one. So here's what I did on EU today. Kind of went through here and analyzed this chart. Again, usually I'm doing Monday to Monday, you know, the last 2 weeks, right? I highlighted this area because this was a point of reference for me again, right? Anytime you see prices coming up to the high, like, okay, you see this multi-session M, you're like, okay, Friday, we closed. Like, obviously we're not trading at the end of the day Friday, right? It's really not a good idea to be holding on to this trade, because if you were holding on this long, then you would have been stuck in consolidation, and then you would have had to gotten out of this trade, because look what happened all day Monday, right? Just trash, nothing. So that's why we don't recommend, because you don't know what's going to happen, right? So you get out of that trade, right? You see that this is happening, you mark it, because now you're expecting, right? Look what happened again. This is another reset, right? We had a beautiful completed pattern here. We had the W, we had the VVM. Now we're in level 3. We're expecting this thing to do a beautiful MAAW, but it didn't do that right here. We only got the M. We got like, we didn't even get an A2, right? We just got the first push down right to the EMA, right? So that's why I tell you all, if you were to short this thing, you would only go to the EMA. It's whether it's either the 50 or the 200. So you would go and short this thing to the EMA, and then look what it did. It hit the low 3 times. Okay, it hit it 3 times. Let me make this a little bit bigger. And it did it all in Asia, right? 1, 2, 3, it hit the low, and then it was back up, right? So now here we go again. We're waiting for prices to give us a clean drop. And this one actually did that, right? We got our M, we got our A, we got our level 1, we got our A2 here with our level 2. And then down here, we had another reset. Okay, another reset. So now we have this completed bull cycle. Okay, you can see clearly here. I invite you guys to mark up your charts. You see where I did my pushes. Okay, a first push here, consolidation, second push, consolidation, third push, consolidation. All right, again, we're expecting this to go and give us a beautiful bear with the MAAW, but it didn't, right? So it only gave us one, maybe 1.5 ADR, and we came down here to not even hitting the 200, but pretty close, right? And then it went back up. Okay, so the system is telling me that we are now going to have a clean drop, right? You see, we have 0 peak formation high on Friday. The system printed this on here. I highlighted this because, again, 3 taps to the high is significant. Okay, I'm expecting this to give me what I'm looking for. Okay, this is what I'm expecting to happen for the next 2 days, 2, 3 days, whatever the market's going to do. Okay, so let's see what happens. Prices have to clear this. This has to cross, right? The 50 and the 200 need to cross in order for us to complete this cycle. If not, it's going to bounce and go back up. Okay. All right. So that is it on resets, guys. Let me check the chat real quick. Let's see. Is there a possibility to have a W off the May on H1? Yeah, absolutely. Like I just showed you right here. Here's the W off of H1. Okay, it could totally do this and go up, or we can have the extend this 200. Excuse me, that's the 50, and then here's the 200, and then we can expect this to go down, right, and give us this, and then obviously it will be, I expect it to bounce off of this EMA right here to give us the second leg to go back up. Does that make sense, guys? Okay. Any questions? Awesome. Makes sense. So what I recommend for you all, go to your chart, go to the pairs that you're going to be trading, okay? And identify your peaks, right? Because obviously this W here, this is your peak formation low. This is your peak formation high. Okay. Do you see your V's, right? Or maybe you're counting your consolidations, right? You could do it that way too, okay? Whatever helps you to see it, right? And just do that, right? Do you see where prices did not complete the ADR? Okay, why I like this indicator Now this indicator, guys, this is the Gcash dashboard. This is a lifesaver because it analyzes all the pairs for me. I don't have to go and draw my ADRs anymore. Okay, I don't have to do that because it plots them on the chart for me. So because this is telling me, okay, this is EU and it's telling me that we're expecting, so I'm expecting prices to break this 200, right? And I'm going to use this as my target right here. Totally, I'm using that as my target. And then here is my next target right here, because sometimes it might cross this. Let me get my annotation real quick. Sometimes when it's ready to come down here and do the W thing, it could come down here and then go up. Okay, totally do that too, right? And it'll go back up somewhere around here, or maybe it might break that range, right? And then create a new level up there somewhere, right? But as for right now, I'm expecting this thing to come down here, break this 800, and then give me the reversal down here, new peak formation low, right? That's what I'm expecting around this area, okay? So don't be, when you see this ADR, sometimes it can probably, like I see it a lot with US 30, obviously. I trade US 30 is my main thing that I trade, that it will even extend a little bit and then go back up, right? So that's what we're expecting. So if they do what we want them to do next week, then we're looking to go short on EU, okay? Totally going short, but it has to cross this, okay? Does that make sense? Okay, TDI for exit. No, it's not a problem. We can talk about TDI quick. Let me erase all of that. So let me see here. This is a nice W right here. Okay, so let's say, which you also like, you definitely want to use this TDI for confluence as well, because you can see, if you can't see this W here, you can definitely see the W here, right? You can totally see that. So this right here is usually green. I just colored it black so you can see it. So this is the RSI, and this is, we also say it's a shark, right? Shark is out of the water. These lines here are the volatility bands. They're usually blue. I made mine gray. So you have the volatility bands, you have the RSI, which is usually green. Then you have the red RSI, which is the trade signal line. And the yellow is your market baseline, okay? Some people also say this is like the liquid 50, right? So you see here that you can see how the TDI matches price, okay? So if I was to use this, which we want to, this is a shark fin, right? Essentially, and you can see this W. So once this crosses back in, that's confirmation that this thing is going up, right? It's confirmation that it's going to go up. And some people, they will enter this thing pretty darn early, okay? So let me make this thick. That's too thick. The best way to use this is confirmation, really, like, okay, this is a second leg, okay? You could enter this early, right, if you wanted to, but I want more confirmation. This is telling me that we're headed long, okay? So if I make this bigger, what am I looking for, right? I'm also looking to enter once prices close above the 13, right? That's what I'm looking for. So that happened right about here. It's about right here. Okay, it's probably the better one right here, where prices closed above 13, and then the cross happened around there, right? So this would be your typical entry. Okay. Well, this will be confirmation, and then your entry would be on the next candle, which would be right here. So this is the candle you would enter, right? Let's make that green. And look what we have here. So because this is the candle that you're going to enter, look at where the RSI line is, right? You've confirmed that, you know, this cross had happened. All right. Some people do enter this pretty early, right? They do. Right. But I like to wait a little bit more for more confirmation. You probably could have entered it right here too if you wanted to. But for me, and from what I've learned, once the RSI crosses over the market baseline, that is solid for me. Okay. That is a solid one. Right. I would totally enter this at this moment. Now, again, remember, we are at the high. We don't know what's going to happen. So I would not be holding this thing that long. Okay. So the way you could use the TDI to get out, oftentimes, some people, once you see how we really want it to go out, right? I really would want this TDI to come out of the volatility band and then come back in and cross with the red signal line to exit, right? Okay, that's what you really want, but it got close. It got really darn close, right, to the volatility bands up here. So you could have probably exited right here. This could have been an exit too. That's not what I wanted to do. If I can grab this thing, I'm done. There we go. This could have been, it's not working out, guys. There we go. This could have been a possible exit up in here somewhere. But as you see, guys, you see how the red trade signal line, how it crossed over, right, and started to go down. This is really like the best exit if you were going to use the TDI to do it, right? Or you could have come up here once it came closer and you could have exited that too. It's really, really up to you. But the best way to use it is when this thing comes out of the water, back into the water, and then crosses this, when these things, the red and the black cross, that is official. And then you can see how it's separating and it's on its way down, right? This is a good indication. Like, you're totally not going to see all of this, right? You're not going to see that. But what you will see is this in a bit of separation right there. And boom, that's where you exit. Okay. So if you were to have entered this trade from here, where we just said that this black green, you can call it the black or the green, but for me, it's black, but it's usually green. You see how it crossed the market baseline? That is your official bona fide entry. And then your exit would have been, if you're using the TDI, would have been up here, okay, where this thing crossed and it went down, right? You're going to see this happening all the time, and it's pull back. Like, it's not going to always be a solid like this. It's never going to be solid all the way all the time. It's pulling back a little bit and going back up, pulling back, going back up, right? But it's still up here. But the moment this thing crosses and it starts, and you'll see it going down, right? You can see this thing kind of hooking down a little bit, right? Then you know it's time to get out. And remember, you are at the high. Like, you're not trying to hold this long at all. Okay, you're not trying to hold it. Okay, because you don't know what they're going to do yet, right? So that's how you use the TDI for your entry and then for your exits. So it's also a good idea to get in the habit of going and marking up your TDI, right? And just see it for yourself. Okay, see it for yourself. When you see the prices are out of the water, if you will, and it goes back in, the shark is back in the water, and this crosses and it's up, then you're looking to trade this thing long, right? You're looking for this to go long until this thing starts to curve and it goes down, and then you want to go ahead and get out of the trade. Does that answer your question? All right. Well, that is it for today's class, guys. We'll see you next week, Sunday. Let me know if you guys have any questions in our group chat, and I'll be happy to help. And trade strong, guys. We'll see you on the next call. Thank you, everyone, for joining.